money.
Sometimes I talk about my arena, which is mortgages. Sometimes I talk about other arenas regarding finances. Today I'm going to stick to what I know best, and that is mortgage. We're going to talk about what TRID is. What does it mean for buyers and sellers in today's real estate market? So I want to give you talk a little bit first about Congress established the Consumer Finance Protection Bureau, known as CFPB, through the Dodd-Frank Wall Street reform in direct response to the 2008 financial crisis. Now, under the CFPB, the Consumer Protection Act was established, changing how banks could lend, completely changing our industry. Now, the CFPB, if you look at the definition on the website, the ability to repay rule to intend to prevent consumers from getting trapped in mortgages that they cannot afford, and to prevent lenders from making loans that consumers do not have the ability to repay. So it's pretty simple what the purpose of the CFPB was. Now, there's been a lot of changes since that started after the crisis. We first had the mortgage compensation and how mortgage professionals were paid. That was a big change that happened. We had how the appraisals were ordered, huge change that we saw in the communication, or no communication between the banks and the appraisers in the order process of that. We've had a lot of documentation and things that are additional requests that have came out. Now the newest is TRID. TRID is the TILA, Truth in Lending, RESPA, Real Estate Settlement Procedure Act, Integrated Disclosures. So that's what TRID is. It's taking the Truth in Lending Act and the Real Estate Settlement Procedure Act, integrating and making the disclosures combined. So TRID is a disclosure rule. That's really what TRID is. It's a disclosure rule and how consumers are going to be disclosed to. So there's two disclosures that are coming in change with TRID. There's a loan estimate, or what's called the LE, and it replaces our current GFE, the good faith estimate, and the initial TIL. So these two disclosures have been put together in one disclosure, which is called the loan estimate. Now, the other disclosure is the closing disclosure. So these are the two new disclosures in TRID. The closing disclosure, or the CD, it replaces the final Truth in Lending disclosure and the HUD-1 settlement statement. So that's what TRID is. It's these two disclosures that are now replacing four disclosures before TRID comes into effect. Now, the Consumer Finance Protection Bureau had TRID taking place on August 1st. Now, a lot of these things, there has been extensions to it. We have confirmed that that the extension now is to October 3rd. So October 1st is not going to happen. It's going to move to October 3rd. So we've got a little more time, and it could be extended again. It's time will tell, but as of now, it will take effect October 3rd. Now, banks are already in preparation, have been doing a lot of things behind the scenes to prepare for the August 1st date. So a lot of these things are coming into play. But how do we speed up the process? Because basically the disadvantage of this is it's just going to slow things down. So how do we speed up the process? There's three things. Communication from all parties. Lenders communicating appropriately with realtors communicating with clients and consumers, the lenders communicating with clients, escrow, everybody just really having a strong line of communication of what's happening with TRID. Also, realistic expectations. Changing things a little bit. Expectations of closing timelines. Now, I'm going to talk to you about that a little bit in just a couple minutes here. But as a consumer, buyer, seller, you guys really don't know the difference between a 30-day close and a 40-day close. You just go based on what we in the industry are telling you is traditional closing timeline. So if we could just extend that a little tiny bit, I think it's going to make it a lot easier for you, the buyer and seller, and it's going to make it easier for us that represent you, the buyer and the seller. If we don't change it, we're going to live in chaos mode until people figure it out and we extend things a little bit. The third thing in speeding the process up is a sense of urgency. So just really having the sense of urgency in what's happening, which goes in line with the communication. So on TRID, I want to first talk about the pre-approval stage because there's a lot of things that you can read online there, and some things are conflicting other information that you can hear. But you'll see things online about the pre-approval process going to change, which means you can't get a formal pre-approval because the client can't provide any loan documents up front to you. That is not correct. The clients do not have to provide documents. So as a consumer, through the changes in the disclosures and the rules, they want to make sure that you're not required to do anything if you don't want to. We still have to disclose and follow the requirements of TRID. But any mortgage professional is going to encourage and give you the options to provide actual documents so that you can get pre-approved, meaning you can go through the pre-approval process prior to making an offer. Now, I don't want to confuse things when it comes to your offer getting accepted. You want to close on a mortgage. There is no request for documentation. You provide the documents, you get a loan. You don't provide the documents and you don't get a loan. But I'm talking about the pre-approval stage prior to having an actual completed application, which means that you have a property address. Now, I want to talk about the loan estimate. Where it's going to really delay the process for lenders that are going to require snail mail, and they're doing this because it makes it a little bit safer for them for auditing purposes. You want to really be working with a lender that's going to take advantage of the electronic, because the snail mail is really going to slow the process down. Got 3 days to generate the initial loan estimate, 7 days for the consumer to sign the closing documents, and then 10 days, and these are general days. General days means it does not include Saturdays. 10 general days for you as the consumer to intent to proceed. So we're hearing a lot of things. This intent to proceed is going to slow down the process because it's 10 days. As a consumer, you can choose to intent to proceed to move forward as soon as you get this disclosure. You can wait your 10 days if you want to. And if you do that, that's going to slow the process down tremendously. So again, it's just communicating on how this works. Order the appraisal. You've heard things out there online about the appraisal is going to be delayed. It's not going to be delayed any more than it is right now. As soon as you do the intent to proceed, the appraisal can be ordered just like it can today. Now, if we move over to the closing disclosure, the CD, 3 specific business days. 3 specific business days means that Saturday is included, unlike general business days for the loan estimate disclosure. The Saturdays are not included. So your lender's going to be generating this for the escrow company. What slows the process down a little bit is the escrow company's got to do some work up front before this can be generated. So they're going to go through the escrow settlement statement, provide that to the lender, as well as the ledger, to make sure that everything's perfect on this. Now, you'll hear some misconception as well as far as the changes to the disclosure. There are 3 requirements, and only 3, to where it's going to start this process over again. If the APR increases, which we're dealing with that right now anyways, nothing new. If you as a consumer changes your loan product, there's no reason you should be changing your loan product if you're working with a mortgage consultant that's educating you from the beginning on what your options are. And last, if there's a prepayment penalty added, I don't know anybody out there that really has prepayment penalties, so I don't think that's going to be an issue. Seller credit, agent credit, lender credit, adjustment to price, as long as it's not increasing, is not going to affect or delay the process. So it's important to understand that it's not as big of an issue as what it may sound like it's going to be. I think really just adding an extra 5, maximum 10 days to our current closing timeline is going to make things easier. But the reality, if we were adding an extra 5 or 10 days to the closing timeline now, things would be easier. So it's just moving the expectations a little bit. Needing 60 days to close, that's not accurate information. That really is only going to be a challenge when lenders, again, are using snail mail. I need to wrap up my money chat, but I want to give you a little bit of an idea of what's happening in the mortgage industry, and then you can appreciate why documents are being requested. Getting a mortgage is no fun, and you will have to provide every document that you can imagine and more on top of that. Here's the good news. The pain's going to last for maybe 30, a little bit longer than 30 days. After that, you own a new home, so please keep the end in sight. After the financial meltdown, the banks lost the privileges to make their own rules, their own lending requirements. So instead, the government decides what needs to be required. And if it's not met, then the lenders can no longer lend to new homeowners. So the other crazy part is the government doesn't take the bank's words on documentation provided, but requires a third-party verification on all documentation. An example is this: is you've got full tax returns. On top of the full tax returns, the lender has to order an IRS transcript to verify that the tax returns have not been falsified. This is only one example. So please know that your company that you're working with on the lending side, your mortgage team, are all on your side. The ending goal is to secure a mortgage for you. So just know there's a lot of documentation, but look at the end in sight and you'll get a mortgage. That's my money chat. I want to go ahead and take us to commercial coming up in the money hour. If you're a buyer or seller in today's real estate market, how should you navigate through the process? Well, I've got Wolf Pulse with Windermere Real Estate Euro Bay in the office today, in studio today, right here on 1150 AM KKNW after this short break.